Hello traders, hope you're doing good. You're welcome back to the Forex Geek channel. And in this video, we're going to be revealing the 1, 2, 3 order blocks trading strategy that banks do not want you to know. Okay, so this strategy dives into the core of market manipulation, where big institutions place their trades and how you can align yourself with those moves. All right, let us quickly start with what makes this strategy unique. Now, the 1, 2, 3 pattern is a classic market structure concept, often used to spot reversals or trend continuations. But when you combine it with order blocks, it becomes something else entirely. It becomes a roadmap to institutional trading behavior. So what is an order block? It's a price zone where institutions have placed large buy or sell orders. These areas are often hidden in plain sight, right? They're often hidden in plain sight, usually found near the origin of strong moves or just before major breakouts. When you learn to spot them correctly, they become powerful areas of interest. Okay? So here's how the 1, 2, 3 pattern fits in. Point 1 is the swing high or low where price begins to shift. All right? Then point 2 is the pullback or retracement. All right? You can see that we actually have a bearish market structure here. Okay? So we can see that price began to shift around here, right? We had price begin to shift around there. And then we had a pullback around here, right? And then we finally have a break of structure or the creation of a higher high. So we have our point 3, all right? Point 1, point 2, point 3. Okay, so this confirms a potential trend shift. Now, here's where the strategy gets deadly accurate, between point 2 and point 3. All right? You'll usually find an order block. Probably somewhere hidden in plain sight. So that's your zone, right? Once you've marked it, you wait for price to return to that area, right? But not just any touch, you wait for confirmation. Okay, wait for price to return to that zone. You can see. Then make sure you get confirmation. Look for rejection, liquidity grabs, and wicks, inside the order block zone. That's your entry trigger. All right. So this allows you to trade with the institutions, not against them. You are not reacting to price. You are anticipating where the next move will be based on how the market makers operate. Now let's go over a quick example. All right. So this is just one example that we have identified, right? Let's see if we can find another example. Okay, so imagine a strong downtrend. Price forms a new low right? Pulls back and then forms a lower low. Now, the candle that caused the move from point 2 to point 3 becomes your bearish order block. All right? So price eventually pulls back. Imagine price eventually pulls back into that zone, weeks into it, shows a rejection candle, right? Shows a rejection candle and boom, that's your short entry, right? Stop loss above swing high, take profit. You can trail your take profits or use key support zones. In this case, for a buy, stop loss below swing low, you can trade your take profit or use key resistance zones. All right, now here are a few key tips. Use clean charts, okay? Do not crowd your charts with indicators. Also focus on high volume sessions like London or New York sessions, okay? Combine this with liquidity zones, look for equal highs and lows that institutions love to hunt. All right? It's important to note that this strategy is not about getting in and out quickly. It is about precision, okay? This strategy emphasizes precision. You wait, you watch structure unfold, and you let price come to you. So that is what separates consistent traders from the rest. All right? Meanwhile, make sure that you always observe good risk management. Use good risk to reward ratios. Like you can see in these examples, we have good risk to reward ratios. All right? It's very important. Ensure that you do not risk more than 2% of your account balance in a single trade. Okay? So if you found this strategy breakdown helpful, drop a like, subscribe to the channel, and turn on the bell for more trading strategies like this. Let me know in the comments if you want a full backtesting video or live trade example using this exact strategy. In the meantime, thank you for watching, and I look forward to seeing you in the next video. Stay sharp, stay patient, and trade smart.